Welcome again. My name's Tom Jenkins. I work at ETOA, and I'm actually delighted to be joined by two old friends, I think I could almost say. David Bennett, who's been our VAT expert since before I joined, and given that I joined ETOA comfortably in the last century, David's been here for longer than I have, I would say. And Volker Jorzig, our good friend from Germany, who's going to be talking about the German dimension of the regulations, which we will be hearing about in a little bit. So, with that thought, I'm going to hand straight over to David, the doyen of VAT. So, I'm going to hand you over to that.
Well, thank you, Tom, and good afternoon, everybody. Lawrence, if we could just put the slides up, please. Brilliant, thank you, and move on to the next one. Great, thank you. So I'm going to talk about two main things this afternoon. Fairly briefly on the deemed supplier regime, and then on the the more pressing perhaps subject of Tom's reform. I did do a presentation on the DSR or deemed supplier regime with ETOA around about 15 months or so ago, which was a fairly detailed look at the rules which at that time had just been passed. I believe those slides are still available. But anyway, today my intention rather is really just to give a brief recap on what this is. Give you all a quick update, and then move on to Tom's. So the DSR already exists. The legislation has been passed in the form of a European directive around about 18 months or so ago now, and its purpose is to tackle what the Commission became convinced was a distortion of competition between the traditional economy, hotels in particular, and platforms. And it has the effect of ensuring that a platform, and we'll look at precisely what that means in a moment, will pay VAT on short-term accommodation rental, usually referred to for obvious reasons as STAR. And again, we'll have a look at the definition of that. A STAR plus passenger transport by road. So the platform will be expected to pay VAT as if it was the supplier of the accommodation or transport, broadly speaking, in circumstances where the actual supplier of the accommodation or transport, for whatever reason, does not pay VAT. Member states need to make this effective at some point between July 28 and the start of 2030. Now, one of the points I was making when we did the big presentation on this back at the end of 24 was that the legislation is imprecise, it's vague. It really doesn't nail down the circumstances in which the DSR will apply, in my opinion, very well at all. And I think in recognition of that, the Commission announced some time ago that they would prepare detailed explanatory notes on the operation to help everybody to understand how this should work. So again, if we could move on to the next slide, please. Just to recap, these are basically the four conditions which must all be satisfied before the deemed supply is considered to exist. So firstly, there must be a supply facilitated, crucial term, which we'll define in a moment. So there must be a supply facilitated by a platform. The supply must be of STAR, or passenger transport by road. The supplier itself does not account for VAT on the supply. And lastly, the accommodation or passenger transport takes place somewhere in the EU. And it's worth pointing out here that this is a global measure. There's no distinction here between platforms established in the EU and platforms established elsewhere in the world. So a platform, again, we'll look at some of the definitions in a moment, but this applies equally to platforms in the EU and those elsewhere. So if a UK, US, whatever non-EU platform satisfies these four tests, it needs to consider what its obligations are in future for paying VAT. And Lawrence, again, if we could move on to the next slide, please. So here are some definitions, all taken from the legislation. We do expect that the explanatory notes will include a lot more detail on the type of situation in which the DSR will apply, but the legal definition of a platform is that it means an electronic interface such as a marketplace, platform, portal, or similar means. The guidance note for similar legislation in other areas of VAT makes it clear that it's intended to be very wide. So to my mind, an OTA, for example, an online travel agent, is a platform for this purpose. Short-term accommodation rental, the uninterrupted rental of accommodation to the same person for a maximum of 30 nights. So that's the legal definition of the type of accommodation that is potentially subject to VAT under this. And now, perhaps the single most important, facilitate. Remember, a platform in a wide sense is only required to pay VAT if it facilitates a supply. And this is what the legislation tells us is meant by facilitate. The use by a taxable person of an electronic interface to allow a customer and a supplier offering supplies within the union of short-term accommodation rental or passenger transport services by road through the electronic interface to enter into contact, which results in a supply of those services through that electronic interface. That's a bit of a mouthful, but basically the platform brings a supplier and a customer into contact, with the result that the customer buys services via that electronic interface from the supplier. So that is the definition of facilitate. And I think it's fair, certainly to my mind, this is the case. Facilitation is akin to acting as a disclosed agent. So somebody who operates in his own name, either as a principal or as an undisclosed agent, is not, I think, subject to the DSR. But as we will see in a moment, that point is not accepted by all, and we'll come back to that issue, because for a lot of tour operators in particular, that's going to be a particularly important point. Okay, next slide, please. Thank you. So the explanatory notes were promised by the Commission, and to start the process, they organised a Fiscalis meeting, which took place in Madrid roughly 6 months ago. Now, Fiscalis is a meeting of representatives from both the Commission and individual member states, the tax authorities, plus business groups, plus people, advisors from the various Commission expert groups, etc. There were around about 80 people present at the Madrid Fiscalis, all to discuss the issues that the Commission considers needs to be addressed in its explanatory notes. Now, I don't want to go into this in huge detail, but I do want to identify a number of issues which everybody accepted would be difficult, but which are not necessarily resolved. And the first one is this facilitates point. Now, remember, VAT is payable by a platform if it facilitates a supply. I said that facilitate, to me, is akin to disclosed agency. Therefore, a person selling travel services, accommodation, or passenger transport as a disclosed agent, i.e. in circumstances in which its agency status is visible, it's disclosed to the other parties in the transaction, could be within the DSR. There's still other tests to satisfy, but certainly needs to consider what obligations it might have. Somebody, however, who is not selling as a disclosed agent, in my opinion, is not a facilitator and therefore cannot be subject to the DSR. Now, one of the conditions of TOMS is that you sell in your own name. So a disclosed agent is automatically excluded from TOMS. Therefore, I think it should follow that somebody who satisfies the conditions for the use of TOMS does not need to worry themselves with the DSR. And I made this point at the Fiscalis, but it wasn't accepted by all. And some felt that facilitation needs to be interpreted much more widely, i.e. it's not just limited to somebody selling as a disclosed agent. And that somebody who satisfies the conditions for the use of TOMS could nevertheless be a facilitator. And in those circumstances, the DSR would override TOMS, with the effect that somebody might need to take certain transactions out of its TOMS calculation and apply VAT under the DSR instead. Now, we've written to the Commission since to explain our position on this and in detail to go into the reasons why we think somebody who is a tour operator acting within TOMS cannot be subject to the DSR. It's 6 or 7 months now since we wrote on that. We haven't had an answer yet. And it will be, I think, quite an important point when the Commission does give us their response. A couple of other issues discussed at length, but no real solution to these. Who pays VAT under the DSR when there is a supply chain? What happens if you have 2 or potentially more online operators, agents of some description that meet the definition of a platform, selling to each other? You might have 4 or 5 of them. Who knows? Do they all have to pay VAT potentially, or just one of them? And if it's just one of them, which one should it be? I think it's widely thought that it has to be the final platform in the chain, but it's difficult whichever way you look at it. So again, that needs clarification. What happens if a tour operator is part of a supply chain? A tour operator does not charge VAT. So if a platform is selling a tour operator service, is facilitating a tour operator service, if you like, does that supply unintentionally, probably, get dragged into the DSR on the simple basis that the facilitated supply is not subject to VAT in the normal way? We think the Commission accepts that no, it shouldn't apply in that, but that's exactly the sort of point that needs to be clarified in the explanatory notes. Happy to take questions, of course, on any of this later on, but if we could move on to the next slide, we'll move on to the TOMS reform.
Oh, David, if I may,
yes.
Sorry, I'm just going to jump in only so far as I appreciate that for some of us where, sorry, I'm just turning my camera on again, it's not, this is already sufficiently complicated without piling into a new area. I pick up on my video's not on. It is now. I thought, if I may, I just want to just clarify a couple of points, just so that I've got it straight in my head. I think that this deemed supplier regulation is really meant to tackle distribution, obviously by online platforms, of supplies, particularly accommodation supplies that are not taxed normally, which are a very small gîte and bed and breakfast, for example, which would fall under the de minimis rules for VAT. And the Commission is very worried that these people are effectively competing with people paying tax on online platforms and they want to try and organise that, sort that out. And in order to do so, what they've done is they've implemented a DSR, which really for the first time, and I think this is what really is interest to us, because there are not that many members selling untaxed accommodation. There are some, but it's a very small thing. The main issue is that they say that irrespective of where you sell this product, you will be paying VAT for that product. And there's a degree of extraterritoriality, if I can use that phrase, about this provision. They're saying it doesn't matter if you're a website based in Brazil, if you're selling a gîte in France, you register Sunshine and you pay VAT on that gîte. Now, what's intriguing also for us is that one, it involves extraterritoriality. The other thing is that the whole pile of things are unresolved and they're steaming towards implementation. When is implementation due, out of interest?
Well, July 2028 is the earliest date by which, from which a member state can make this effective. I haven't heard anything on this particular point recently, but there was a strong suggestion that Spain in particular actually wanted to go earlier. But I think it's a reasonable assumption that Spain will have this in place by July 28. Others then maybe closer to 2030 by the time they do it, but it's not far away. So 2 years or so, we could be seeing Spain and potentially other member states with a local requirement that platforms, as you say, Tom, anywhere in the world selling an untaxed Spanish service could be obliged to collect the VAT and pay it at the local rate to the Spanish authorities. Yeah, absolutely. That is exactly what this is all about.
And what I I know we've got to move on, but the other interesting thing from my position is that they're quite happy to leave some really central issues unresolved at the moment. They're proceeding with the basis this is going ahead, and they haven't sorted out the relationship of Toms versus DSR. They haven't sorted out who's responsible for paying the DSR when there's a supply chain, and they haven't sorted out what happens with tour operators' sales within that supply chain. They're just sort of going, right, we're going to do this, but we'll sort the details out later, which is, I assume they're going to, in theory, formalize the details before the thing's implemented, but there's almost an implementation of, yeah, let's do this and let the courts sort it out, which is extraordinarily gung-ho. I mean, it's a very weird thing to do.
They are attaching enormous importance to their explanatory notes. I can't remember how many issues there were, but they before the Fiscalis meeting, they circulated a list of all of the questions and issues for discussion. And there was something like 88 questions. And actually a load of other ones, of course, came up on the day. But that number sort of illustrates just how many uncertainties there are with this. And yes, it's a very broad piece of legislation, which I think they're hoping to apply quite narrowly. But the legislation, as it stands, arguably has a much broader range of effect than really they were looking to achieve. And I suspect that I really don't envy the Commission the task of writing the explanatory notes. It's a thankless task. It's just so complicated. There's so much to consider. And I suspect a number of things. Member states might decide that some of the guidance is not what they want and do their own thing. Because this won't be legally binding guidance. It will be that. It'll be guidance. And that taxpayers will be challenging either the position that the Commission decides should be followed or maybe the individual interpretations of member states. So it promises to be an area of real difficulty and uncertainty for, I think, quite some time.
And obviously, last question I've got on this. And guys, by the way, please put questions in. It shouldn't just be a trialogue here. But the whole notion of an undisclosed agent. And what is the status of a search engine who's providing access to the, say it's a gîte in France, and they're advertising on Google or presenting themselves on Google, and you can book directly with the gîte, but via a Google introduction.
Yeah, I think. I mean, there is more detail in the legislation than I've done now, and there are a number of examples in the law of activities that don't constitute facilitation. And I think the type of situation you just mentioned would not be. So merely listing the availability is not going to make you a facilitator, I think. You have to do a bit more than that. You have to arrange the transaction. Maybe that's the way to look at it. But inevitably, there will be a lot of grey areas where certain online players are genuinely unsure. There's one thing being a platform in the EU, which perhaps is used to some of the complexities of European VAT, but try to explain this to a platform in parts of the world that have no experience, should we say, of this, it'll be doubly, if not triply difficult.
Okay, let's get on to Tom's reform, which is the hot news topic that we've got.
Okay, well, there's nothing new about this either. Of course, it's been going on all the way since 2001. So the Commission has had a few attempts, and now we hear this is the fourth or fifth time, I think, in the last 25 years or so that they've decided that they really do need to try and sort out this area. This is really a relaunch of the process they started 4-5 years or so ago, but then decided they wanted to focus on the DSR, and therefore Tom's was put on the back burner. But last year there was yet another public consultation. It was largely a rerun of what they did about 4 years earlier, but we've just had another Fiscalis. So this is the Tom's Fiscalis of March this year. And again, it looked at a number of questions, not as many as 88. It was only 18 this time. And they were very much hand-selected issues that the Commission wanted us to focus on. And we'll come on. The main thing I want to do really is to talk about what happened in that Fiscalis. But before we get on to that, just a word on the timescales. Commission is still talking about having a legislative proposal ready by the end of the current year, which they will publish in conjunction with an impact assessment and also their economic study on the effects of the sort of measures that they are proposing. Now, the study was actually written back in about 2022, and I think some of you contributed information, etc., to the contractors doing that. Because the Commission put the whole thing on hold, the study was never published. It has just been updated with new economic data. The Fiscalis started off with a very, very brief look at the headline figures and findings from the study, but we really don't have much of an idea of what the conclusions of that study are. It will be published, we're told, at the end of the year, together with the proposed legislation and the impact assessment. Okay, next slide, please. Okay, so this is just my personal view, really on what happened at the Fiscalis. I should say there were 90 odd people. Again, it was Commission representatives, member states, various experts and business representatives as well. For the most part, the meeting was conducted in 8 separate, much smaller groups. Everybody discussed the same issues. And then there was a wrap-up session in which each of the groups reported back to everybody else what conclusions they had reached. But of course, your view on the likely direction things will go on is heavily swayed towards the discussions in your own group. My overall view is that we didn't agree anything at all. There were on every subject at least two options preferred, and usually far more than that. So there was no one issue on which everybody was agreed. But the direction of travel seemed pretty clear on a few issues, which we'll cover in a moment. And finally, there was enough common ground to allow the Commission to prepare the promised legislative proposal, which will then go to the member states for discussion and amendments, etc., in the normal way. Okay, and again, next slide, please. So the main issues discussed, or I should say, let's recap at this stage on the Commission's objectives from this. And I think there are two main goals. They want to remove the inequality which they perceive as existing between EU and non-EU tour operators. When we were talking about the DSR just now, hopefully it was clear that it's a global thing. Non-EU platforms are affected in just the same way as EU platforms. The key thing is where the accommodation or passenger transport takes place. And in a similar way, under TOMS, the intention is that EU and non-EU tour operators should face the same obligations and, broadly speaking, should pay an equal amount of VAT on any given transaction. So that's the first objective, to achieve that. And secondly, in recognition that the current rules are a bit like the DSR, a bit vague and open to interpretation, the Commission wants the rules to identify very much more clearly what member states and taxpayers should be doing, so that the approach is very much more harmonised. Now, within those objectives, 5 main areas of discussion existed. The place of supply for those in TOMS, the scope of TOMS, i.e. to what extent does, what type of transaction should TOMS apply to? What do we do about all forms of B2B supply? If TOMS does not apply, then what is the VAT approach? Nobody is suggesting they're not subject to VAT, but there's a number of different ways you might tackle it, and Tom has already mentioned the UK, the 15-year-old UK approach. That is one of the possible ways in which supplies, particularly packages outside of TOMS, might be subjected to VAT. And then finally, the method of TOM's calculation. And that last point was the one that we were probably closest to having some unanimity on. But if we move on to the next slide, we'll have a look at the place of supply issue. So numerous options have been floated at various times, but the Commission limited the discussion to 3 possible bases. Just worth recapping that the current TOMS place of supply is the place of establishment of the tour operator. And it's the fact that a non-EU tour operator has no place of establishment in the EU, which is the basis for the non-taxation and the allegedly unfair competition between EU and non-EU tour operators. Now, that's a fairly widely accepted interpretation, but not accepted by all. Germany and Croatia, notably within the last 5 years or so, have questioned whether that's the right approach, and we'll hear from Volker about Germany fairly soon. Everybody has agreed, however, that dealing with the inequality of EU and non-EU tour operators, the way to do it is to reform the place of supply. Now, the first approach we discussed was to maintain the current approach for everybody but to add a use and enjoyment rule. And I will look at that one in more detail in a moment, because that one was that was preferred by more member state representatives, not necessarily business representatives, but member state representatives, importantly. And I think there's a distinct possibility that that is the approach that will be adopted if and when the Commission launches draft legislation. So I'll look at that in a moment. But briefly on the other two, the first would apply the same test to all tour operators, and the margin would be taxable where the customer resides. So only if the customer resides in the EU, and probably the travel is within the EU as well, would there be any VAT payable. A non-EU tour operator would therefore only need to consider EU VAT if it sells to an EU resident person. That has long been, I think, the preferred test by many. Unfortunately, though, with the member states in particular, certainly those that I spoke to during the Fiscalis, that was not a preferred approach. And then thirdly, the same test for everybody, not based on the place of customer's residence, but the member state of destination. So here, a holiday to Italy would be subject to Italian VAT. It would still be margin VAT, but it would be payable in the member state of destination, i.e. where the holiday takes place. And again, that would apply to everybody. But that was, I think, considered to be unduly complicated. So again, that didn't meet with the favour of most people, at least to the extent that I could be aware of it during the Fiscalis. But let's have a look. Let's move on to the next slide and have a look at what this use and enjoyment thing would be. As I said, there was no agreement, but this approach did seem to be the preferred one. Now, use and enjoyment is not a new idea. It's existed in the VAT legislation for decades. Article 59A of the VAT directive says the following: in order to prevent double taxation, non-taxation, or distortion of competition, member states may consider the place of supply of services, if situated outside the community, as being situated within their territory if the effective use and enjoyment of the service takes place within their territory. It's an optional rule at the moment. It's member states may consider. I think all member states do have some application of use and enjoyment, but it's simply not applied in the TOMS area at the moment. It cannot be. EU legislation lists the services which are eligible for inclusion under use and enjoyment, and it just doesn't cover the services of a tour operator, or indeed services such as accommodation. The Commission's plan here, I think, is to add the services of a tour operator to the list that use and enjoyment could apply to. And it would be compulsory in this area. So where it's currently member states may consider, in future it sounds as though it would be member states will consider in the right circumstances. So again, we could move on to the next slide. Staying on the same subject, how would this work in practice? Well, an EU-based tour operator would pay VAT on the margin in the member state of its establishment. Therefore, use and enjoyment would be inapplicable. Subject to other stuff we're talking about, the EU tour operator's position would still be the same. They would just pay VAT on all EU travel in one member state. But use and enjoyment would kick in for a non-EU tour operator. The basic place of supply test would remain as it is now. A UK tour operator selling through a UK establishment would have a UK place of supply. But the application of that rule would not mean the payment of VAT in any EU member state. And therefore, the compulsory use and enjoyment would override the basic effect of the place of supply. And the Commission at least says the effect of that would be you would look at the place of the effective use and enjoyment, which would be the member state in which the holiday takes place, and you would pay VAT there. So imagine, I don't know, a US or a UK tour operator sells a holiday in Spain, but to a UK or US customer, as the case may be. The place of supply would be, in the first instance, the UK or the US, depending on the supplier. But use and enjoyment would override that result, so that the tour operator would be obliged to pay, in this example, Spanish VAT on the margin on that transaction. Now, there'd be a lot of discussion about how that would be calculated, etc. But the intention of this proposal would be to make the tour operator, on some basis, liable to an amount of Spanish VAT in that example. Now, a more complex example, same tour operator sells a tour, and let's say it takes place in France, Germany, Austria, and Italy, a coach trip, possibly. 4 different member states. It seems inevitable in that situation that the effective use and enjoyment would be said to take place in the 4 member states, and therefore the margin has to be allocated to each of those 4 on some basis, so that the tour operator would end up paying some French, some German, some Austrian, and some Italian VAT. Again, the mechanism expected that the tour operator would pay that VAT would need to be discussed and agreed, but there'd be a split of the margin between 4 member states. Now, contrast that to a situation where the same tour is sold by, I don't know, a tour operator in Germany. There would be German VAT and only German VAT on the whole margin of that transaction. So it's not really absolute equality, but that seems to be, as I've said a couple of times, the preferred position. Now, a counter argument is to say, well, okay, use and enjoyment, but actually, where does that use and enjoyment take place? I asked this question during the Fiscalis and made the point, well, look, if the tour operator is in the UK or Norway, Switzerland, Australia, wherever, and his customer is in the same country, isn't it realistic to say the use and enjoyment of the tour operator's service of putting the package together, taking the risk, complying with package travel regulations, whatever it might be, is actually enjoyed in its own country where the customer also lives? And I have to say the Commission's response to that inquiry was no, that's just not right. That's not how it should be interpreted. The effective use and enjoyment must be in the member state in which the travel itself takes place. We'll see. I know representations have been made on this point to the Commission since the Fiscalis. Too soon to have any expectation of a response on that yet, but hopefully we will get some sort of response from them fairly soon. So that's the place of supply, and if this seemingly preferred approach is adopted, it will be very far-reaching. One way in which the complication might be avoided, although not the payment of VAT, would be for a non-EU tour operator to create an establishment, effectively become an EU tour operator, and just pay VAT in that one member state, which some would probably look at. But that we're a little way off having to consider that. But anyway, if we move on, see the scope of TOMS. And here we're looking at issues, a number of different things, but I think the most important conclusion or feeling from the Fiscalis is that a lot of member states think that single items should be excluded. At the moment, the effect of European case law is that single items, notably accommodation only, falls in TOMS. Provided all the conditions are satisfied, it's in TOMS. It was a common view that that shouldn't be the way going forward. Only packages should be included. And furthermore, a package should only be eligible for TOMS if it contains at least accommodation or passenger transport. Quite often, of course, it would be both. But it must have one of those if it is to be eligible for inclusion. And again, quite a few practical questions would arise. A travel management company, for example, will often sell a single service. So on this basis, TOMS would not apply. But what if the same business customer, say, buys accommodation on day one and a week later buys a flight for the same trip? Does that subsequently become a package for this purpose? Or is it two separate supplies? It could be either, conceivably, but that's the sort of point that would need to be clarified. In any event, it is quite a narrowing of the scope of TOMS if this goes ahead. And what would happen? I asked the question, I don't think the member states had considered this, but the multitude of online vendors of accommodation only. Okay, they might be caught by the DSR in some circumstances. There might be a disclosed agent selling hotel accommodation. But if they're selling in their own name, their exclusion from TOMS would suggest they need to register and pay VAT, potentially in all of the 27 member states, which is an enormous enforcement task. I understand entirely why they may want to do it, but I think they may be underestimating just how difficult some of these things would turn out to be. And just a few more slides, if we could move on to the next one again, please. On B2B supplies, there was generally a feeling that there needs to be a B2B opt-out. So particularly for the TMC and MICE sectors, the current rules are impractical. They force travel management companies, for example, very often to take on a disclosed agency role, which they probably wouldn't otherwise do, simply because of VAT. So it's accepted that there should be an opt-out to avoid that problem. Member states were worried about abuse. I think they're wrong to be concerned about that. I think it would be perfectly manageable and controllable. But I understand they would need to feel confident on that point. A lot of questions about, well, how would the opt-out actually work? But at least the good news was that the member states and the Commission, I think, are persuaded that something needs to be done in this area. On wholesale supplies, though, and here I'm really talking about transactions where the final user is a private person, so not a business. The member states were more inclined to say no opt-out. The use of TOMS should be compulsory. I think the practical issues over that again, I would imagine, but the member states certainly feel that there's no need for an opt-out in that sector, and that TOMS should be compulsory, but only, of course, for packages. If they limit the scope to packages, a wholesale supplier of accommodation only could not be in TOMS, and would be subject to normal VAT, and would have to pay VAT in the member state in which the accommodation is situated. And again, the next slide, please. We have two subjects left. Neither of them will take us very long. This one is the treatment of supplies outside of TOMS. The Commission papers basically floated the possibility of the multiple supply, the reverse charge, and the predominant supply approach. The reverse charge approach, for those in the UK familiar with the package treatment in the UK, that is the reverse charge approach. Those who might remember what we did in the UK before the current position that was phased out from around about 2011, that was the multiple supply approach. That requires a package of services to be split and different VAT treatments applied to the accommodation, to the transport, to the entertainment, the catering, whatever that might be in that package. And there's a different the values applied to each and different VAT treatments. That's the multiple supply. Then the predominant supply, as the name suggests, says you identify which is the predominant part of the package and treat the full value as being applicable to that predominant element. Now, for a big package, that probably not going to work anyway because there isn't a predominant element. But in any way, the summary here is that there was just no agreement at all. It was equally split, I would say, from what I heard between the three. So no indications at all as to what we might end up with on that. And finally, last slide on this, the calculation itself. Well, case law requires the margin to be calculated separately for every transaction, which is very messy, but in practice, I think all member states in reality have a simplified approach that means that just doesn't happen. It was agreed by pretty much everybody, as far as I'm aware, that there should be a global basis with a single calculation covering a period, maybe 6 months, maybe as long as a year. But a lot of the detail was argued about what should the period of calculation be? Should it be compulsory? What do you do about negative margins when they exist? That type of thing. A lot of different views. So almost close to unanimity, I think, on the idea of a global calculation, but uncertainty on what form that should actually take. And then my very last slide is just very, very briefly on the other part of the Fiscalis. There were only 2 questions on this. Passenger transport. The place of supply at the moment of passenger transport for for all forms of passenger transport is where the transport takes place. The Commission is saying, should we change the rule solely for intra-EU passenger transport so that the place of supply becomes the member state of departure or the member state of arrival, or, oddly, the place of supply is divided equally across the member states of travel, regardless of the distance covered in each member state. Luxembourg might like that one, but probably others would not anyway. There was very little agreement on this other than to say that 3 is just silly. 1 and 2 are probably equally complicated and probably in practice are no step forward compared to the current rule. There's a typo, I'm afraid, on the slide. It should say there was no consensus, but the common view was that options 1 and 2 were likely to be just as complicated, etc., etc. So apologies for that. That's me done. What do we do, Tom? Have we got any questions?
Well, we've got one question, but I think if there's a new question, I'll have a quick look. Right, I've answered the question. The no news on B2B packages. I'm covering that in 1 second. David, that was an enormously comprehensive run through of the Fiscalis meeting. Thank you. And I think it's sufficiently uncomplicated that we can actually distribute the recording as long as we don't say anything too damaging in the next 10 minutes, but we could probably edit that out. Just to recap, I think I was at that meeting too, as you know. Unfortunately, I had to join it remotely from New York, which meant I was joining it from 3:30 in the morning in New York time, which meant that I wasn't my best form for a discussion of indirect taxation. Nevertheless, I think we were both taken that there was considerable misunderstanding, if I can say this, of the way in which the travel industry works. They weren't seeming to take into account any of the complications that could be taking place in the origin markets. But I think we can, just to generalize, we can be quite clear that the Commission sounded absolutely determined to impose VAT on the sales price of European vacation, irrespective of where that's being sold, and on the price paid by the consumer. I think I think this was there was a degree of determination there, and they were dismissive of anything that would mitigate that. Option two, which was the only one that I thought would work of the various proposals, where you based the taxation on the place of you based the place of supply on where the consumer was, and I said quite clearly that this is the only viable option they had. It was dismissed almost universally out of court by the member states, and I don't think it's going to be considered. And I think the implications of this really are quite clear that we've got a fight in our hands. The imposition on people in third country origin markets is really going to be quite significant. If you are an operator carrying a margin of around about 30 to 35%, your exposure could be a 4 to 5% tariff on turnover, which is no small thing. And I think it's quite alarming. Now, I think, Volker, if you could give us a quick update on what's happening in Germany. But before you do, I did promise something on the UK. Very quickly, the current very beneficial treatment of wholesale supplies in the UK, whereby people can adopt the reverse charge mechanism when sending invoices outside, at the moment stands. I've talked to the Customs Revenue about it. They're well aware of the situation. They've described it as completely unacceptable, but they haven't yet proposed to do anything about it. So we go back to its very origin back in 2011 when this started, when this came in, and David, you can maybe back me up on this sweeping statement. But when we discussed this with people who were applying it, they said, one, I don't believe it, and two, it's not going to last. Well, guys, it's happened and it's lasted for 15 years, but I really wouldn't factor this in as a feature of your margins in the medium to long term, because it could change, and it could change on a dime. They could just turn around and say, we're getting rid of that rule, you start paying it now. And so I would just be very, very careful in the future, because the Customs and Revenue are well aware of the situation and they're not happy about it. When they choose to do something, it could happen very quickly. But Volker, talking of things which could happen very quickly, what's happening with German VAT?
Yeah, news from Germany, travel VAT and TOMS. Well, how to start? There are only 2 member states within Europe that say that non-EU based tour operators are outside the scope of TOMS. This is, on the one hand, Croatia. They did it by changing their law, so they have a regulation in their VAT code, and they did it, I think, 1 or 2 days earlier than Germany, who did not change the law, but who added a regulation which was simply published by the tax administration with a so-called circular letter from the Federal Finance Ministry in Berlin. And very soon after publishing it, Berlin had to give in and say, well, yes, this is our opinion. We think non-EU based tour operators shall be subject to the normal VAT rules with all the effect of normal VAT, meaning in Germany, it's also a multiple supply approach. So with any of the Germany-related travel supplies or place of supply in Germany, you would be subject to being registered and pay local VAT on the part of this sales price. However, we do have until the end of this year a regulation saying basically, and this is also quite easy for Berlin to arrange this, saying, well, they call it in German Nicht-Beanstandungsregel, and I think there is no real word for translating this. At least non-EU based tour operators have effectively a choice whether they want to apply the normal VAT rules or TOMS for the time being. This is this deadline ends on the 31st of December this year. And from my talks and non-talks with Berlin, I have heard that they are thinking about this regulation. They are aware of all the stress and struggle that derives from that, especially for Germany, because for the time being, we have the situation, and this is why when I'm in touch with my clients, I always tell them, look, when the tax administration says you're out of TOMS, that's fine, but that is not the law. If you can use it and it makes sense for you to get an input VAT recovery, just use the rules of the tax administration, take the money and send out an invoice with whatever reverse charge remark to your B2B customers. They are not obliged to pay reverse charge VAT. That's my very clear opinion, because this invoice should be on the TOMS, because that is what is in the law. Um, um, and we do have now in Germany the first decision of a lower fiscal court saying, well, just read the law. It does not. There is no stipulation saying that the tour operator must be established within Europe to apply TOMS. And this question is now dealt with our high fiscal court. We'll see how long it'll take. But in the meantime, my advice, and this is what not only I advise to my clients, but also within our TTL net, that whenever you're in touch with German tax administration, which ask you to being registered to pay, say, reverse charge VAT on accommodation, because your provider, that may be a UK-based wholesaler, that they may be established elsewhere in a different non-EU country, they have provided you with a reverse charge invoice, with a net invoice saying you were obliged to pay the 7% on top. You are not. Full stop. That's the situation, what it is. The tax administration is not willing to give in. So I'm depending on the clients, the different ones that are well affected. You see, we have the tax office in Hanover North, which is the competent one for the UK companies. We have Berlin International for anybody in the world, and we have Bonn Außenstadt for my US clients. When you talk to the people at the tax office and just describe them the situation, these people who are just the tax officers say, well, we understand what you say. We can read the law, but simply that is what we are obliged to do. And it's now 5, 6, 7 weeks ago that I raised this point again in Berlin in one of the known discussions that I quite regularly have, and said, look, what are you doing with this regulation? This is, from a tax perspective, harmful for Germany, because you allow, on the one hand, the B2B wholesalers with travel a refund of German VAT. They issue an invoice, and basically their B2B customers, well, from your perspective, they should pay reverse charge VAT, but they are not obliged to, because it's not in the law. That's simply wrong. So this is the situation in Germany at the moment. We have a lot of discussions with this, and I'm pretty sure everything, whenever you're in touch, when the amounts are not high, and I have some of these clients who simply say, come on, we simply pay it, and that's it then. We don't want to have any discussion with the German tax administration. But others, they may go file an objection, and then need to go to the fiscal courts, and then we will just use this ongoing case, which I'm pretty sure that the high fiscal court will also say, read the law. Do you read anything about where a tour operator should be established? No. This may come up in the future with whatever regulation, but it is not the written law since 1980, since this regulation has been put into force in Germany, the TOMS rules. So I think this is the most important input from Germany in very brief. And I will not comment on what David said. It was a pleasure to listen to him, because we share the same criticism. And also when I listened to what you said about the online fiscalis in TOMS, I think, yes, there is a certain starting point, and the only guy that I know from my TTL net from Cyprus, Alexis, is the one who said, well, yeah, come on. It's at least it's a start, and it seems as if the EU Commission is willing to do something. However, you, David, and me, within these 18 questions that had been discussed in this Fiscalis on Tom's, well, I thought there were 3, 4 questions missing. Yeah, the relevant ones. But that is what that commission is doing, and we have to take care, and we have simply we have to monitor what they are doing and giving input on and being in touch with them. So, Tom, next week there's our biannual seminar here in Germany, where also I meet David, the Tourism Tech Symposium, and in November we'll meet again for the TTL Travel Vet Conference, and we'll see whether somebody of the EU Commission will show up to work together with us on this explanatory notes, because what I realized is everybody has an opinion on every point, but the real overview, that's only some very few people that can immediately understand and describe the situation as it is and work on definite solutions. Yeah. So that's the situation here in Germany.
Volker, but just so that I'm clear, you've outlined the situation at the moment, which is that if you wish to register for VAT in Germany, you can reclaim the input tax on the VAT, and then somehow the German VAT are expecting you to charge, or the person that you're presenting the bill to charge VAT so they can recover it. But at the moment, there's no legal way they can recover that VAT. So
That's
it's
my
almost
opinion,
a mirror of the UK position, which is interesting. And also at the moment, the statute, which is a compulsory registration for VAT in Germany for non-EU operators, stands in abeyance until the 31st of December this year. And in theory, on the 1st of January, it's going to be implemented again. But again, we're just hanging there wanting to know what the legal thing to do is, because it's not clear.
I would say, even on the 1st of January 2027, nobody will be obliged, because the law remains unchanged in Germany. And if tour operators elsewhere in the world can apply TOMS, and this is what is just written in our section 25 of the German VAT Code, this is just, so let me say it in different words, it's just an idea of the tax administration. They are not the lawgiver. And when you have stress with our Finanzamt, you will ask a referee, so the fiscal judges, and they will at a certain point say, look, read the law. There is no obligation to register. This has been my opinion when it started, and it still is. So whenever, because I realized that some of my UK clients, they refrained from doing business in Germany because they did not want to register and pay normal VAT according to to the normal place of supply rules. I would simply not register, and if I'm asked to do so, I would say I'm on the TOMS. And I'm pretty sure we can defend this position.
Excellent. Okay. I think that's clear. If it comes in, if the withholding legislation saying that we're stalling this runs out in January the 1st, there's effectively what you're saying, and it's not the law, it's your interpretation of it, is that there's a higher European law that says nothing about operators having to be based in the EU. This is just German law saying, well, this is what we want, but it can't counter-demand what the EU law says. That's good news. Right. We've covered a hell of a lot of ground. For those of you who've been following us
Tom,
all along. David.
Well, I'm just going to say there's a couple of questions, I think, in the chat that we haven't.
No, there are. I thought we covered them, but go. The one that we haven't covered is, does Customs and Revenue always give a 12-month notice period?
No, I think they probably would give some notice, but I don't think they'd be obliged to. And if you think about what happened when they actually introduced the current position, they just changed their mind overnight. In reality, nobody complained, because for virtually everybody it was good news. So everybody was, and it was backdated. Even HMRC took the view that their previous practice had been wrong. I think they probably would give notice if they were changing this, but I don't think they'd be obliged to. But on this point, in the past, they've always been pretty reasonable. I'm thinking back to some changes they announced in 2008, and they actually asked what would be a reasonable notice period. They were thinking of 9 months. We said, no, not long enough. And they ended up giving us 21 months notice of change. So I think they could probably be persuaded again, but you just can't rely on this, unfortunately. There is one other question as well, I think, from Kate, saying nearly all the invoices we receive from suppliers have VAT included on them, which we pay. Would we therefore have to pay VAT again? Well, sorry, yes. Those of you in the UK, certainly before Brexit, on many transactions would have been used to paying VAT on your margin. And essentially, in a way, you're just going back to that, albeit in a more complex position. But yes, if you, under what we think is the preferred new place of supply, your accommodation and other services purchased from member states would still be subject to local VAT. You'd pay it, you couldn't get it back. So that's a real cost. The difference going forward would be that you would apply use and enjoyment and pay some additional VAT just on the margin in the member state of destination. That's the danger. So,
and I would say that I would stress this looks like the direction of travel. It's not even a proposal at the moment. It's just something that the Fiscalis Committee, there's real momentum from the Commission behind this to try and push this forward. And it's really up to us to see if we can stop it. I'm allowed that to go on record, I think. Okay, thank you very much. I think, David, you quite rightly intervened and answered those two questions. On the basis that there are no further ones, we will try and give a written summary, and we'll be distributing this recording as well. I've changed my mind. Nobody got forward and saying, I'm doing this, is it all right? And we said, no, that's not happened. So we've not had any major examples or egregious examples of tax evasion, which always I find quite frightening on these occasions, which we would not condone, would we, Volker and David?
Certainly not.
It was really just down to me to thank Volker for being so patient and giving us his wisdom. And thank you, David, for giving.
I'm sorry, everybody. I think I spoke too long.
No.
I couldn't see the time while I was presenting, and I was a bit taken aback when I saw how long I'd been talking for.
But I too was at that meeting, as I explained, and it was a fairly grueling 2 days. But we have got a new acronym, which is STAR, which short-term accommodation rentals, which I will now carry forward with me and view the European Commission as being a sky full of short-term accommodation rentals. It's something I will carry with me in the future. Okay, with that reference, I'm going to leave everyone. Thank you so much for participating. I'm delighted that nearly everybody who joined this webinar at the beginning has stuck with it through to the end. And we've overshot our time, but thanks so much, guys. We'll be distributing a summary, which I hope will clarify some of the more arcane points that we've been covering. Thank you, gentlemen. Thank you very much, audience. That's good night from me. Bye-bye.
Thank you. Bye.
Over from Germany. Bye.